Here we are right now at the 50-week moving average on the weekly S&P, and we just started a brand new calendar week. Today is 11/7 of 2011, and it's a privilege to be here. The thing that we're looking at is where that S&P 10-week moving average is ascending in value and crossed above a major 100-week moving average. And what does that mean as far as bear and bull transformations within the broader exchange model called the stock market and whatnot, and how all of that really works? That 50-week moving average, you need to be aware that it's 1270.98, and it's right here. That's this line. That's this one here. However, we have trailed the 20-week. We're going to see where we break up to, and what are we going to be looking at? Real simply, right there at the high of that bar. That's right below the 1300 handle. However, you will have to close above the 50-week. You will have to consolidate and hold support at 1270 on a weekly level to say that you're going to be able to even think about getting up to this neckline over here, and that's about 1314 on the S&P. And what would have to happen is that this weekly MACD, which has been in a sell signal for, weeks, and we finally hit that bottom here, right along with the calendar yearly low in October, where we called for the big rally. And we got it exactly that, and why the bulls were left behind. They still don't believe in it. Yes, Europe is going to end up haunting the market, but listen, right now they're trying to put that on the sideline. The market is surely trying to discount it. That is the part that you want to know. That's why it's good to have that $1,300 call up and out of that money. And we did several of them, and this is 6 weeks involved in the year-end rally. But that still remains the challenge at the 50-week. The bullish part of it is that you've gone from bear back into bull. Why? You're 1 week, 2 weeks, 3 weeks, 4 weeks. You're 5 weeks above the 10-week moving average and it rising. And you had to have 4 weeks closing above it to meet the qualifier. And it has. And so from the bear side of a trend, which we had up here at the yearly calendar highs that we did, we were involved in all of the mess going down, and there's still a lot of mess out there. Don't kid yourself. The thing about it is market techniques and market mechanics, pricing control systems, they work a certain way. Who cares? Right now they're wanting to put that on hold. The higher that it goes, the bigger that it'll fall one day. But right now we're going to see if we can take this weekly MACD on the S&P to a bull buy signal weekly. It's been in a sell weekly here forever. Not only that, my friends, let me show you something else that's cool, is that the last time it had some minor weekly sell signals was back over here in 2010. Of course, you can see what happens when they can go very deep, like they did back over here in 2008. Got at the bottom over here in 2009. It doesn't matter. What does matter is when they do start that area, they have a tendency of going. So it's going to take a lot. Earnings is winding down, number one. There's a big checklist that we do when we talk about these things, and MMTs do know it. All I'm doing is updating you quickly that as long as I'm closing below 1270 and I hold support right above the 1200 handle at the 100-week and the 10-week where it's crossing over the blue line, and I got 4 weeks above the 10-week moving average, versus when you were closing 4 weeks below that blue line. And this is an SMF requirement, and it's an SMF indicator, and it's a qualifier. And the thing about it was we broke down below it, and over here you were 1, 2, 3, but you got back above it. Didn't qualify here. But when we got over here, 1 week, 2 weeks, 3 weeks, 4 weeks right here, it qualified as a bear, and it was, and then it consolidated, the bear did, from that drop and from the calendar year highs in the S&P. Now that we've come back up here, we're going to come back up and challenge the most difficult areas. Is that money this time of year in a very strong market? This is the time you're supposed to buy stocks. Yes, you got all of those stinking problems and all those headlines and everything out there. Set that aside and go with the math and go with what has to happen and what doesn't happen or happens or what will happen in the price action. There's lots of different things that people look at, but let me tell you, the facts remain right here. And the facts remain that the rising 10-week is going up with the close above it 4 weeks. How it comes down and holds support eventually and tests the whole thing is yet to be determined. But we will tell you one thing for sure is we are going to be watching this move because there can be an explosive buyout with the new weekly buy signal. It is definitely headed in that direction, MMTs and everyone alike. It's still minus 10. It's got a long ways to go just to get to zero. That's what the zero line is. That's this line right here where my pointer is. Okay, it's all standard technical analysis. It's not how we make decisions. That's how the public and the big money does, though. We have a different platform that we make decisions with that is far accurate than what I'm describing herein. Nonetheless, MMTs, you already know by using it daily, and I just hope that one day that other people can get involved and see for themselves. This is a bullish breakout on the S&P 500.